conversation forward and discuss the outlook ahead for this market. We have Harsha Upadhyay, President and CIO at Kotak Mahindra Asset Management Company. Harsha, thank you so much for joining in. Season's greetings to you. Wish you a very happy new year as well. And, straight off the bat, let me ask you for your verdict on what we've seen and heard from the two IT big boys just yet. Given, what we've sort of seen since yesterday, do you at all get the glimmer of hope that we're at the bottom and it gets better from here? And what is your own positioning on IT and, taking that forward to the overall call on the market as well?
Good morning, Surabhi. We believe that probably we will see some growth acceleration over the next couple of quarters. It's too early to say that how strong it is going to be. But seems like the growth differential that we have seen between mid-cap IT names and the large-cap IT names seems to be coming down. And also we have seen very, very aggressive cost focus by the large-cap IT names by the result that we have seen until now, which also augurs well because the attrition rates are coming down, and if the continued cost focus allows them to look at higher margin trajectory with the possibly better growth momentum, then I think it augurs well for the large cap IT basket. And probably given the fact that the large cap IT names have kind of underperformed the mid cap IT names over the last year and a half, probably it's time for some catch up in the large cap IT names.
So you're overweight on the sector, as in are you looking to add more, given that you're sounding quite confident and optimistic, Harsha?
We are still probably around neutral weight on IT sector at this point of time, and maybe in a couple of months we are underway. But over the next few quarters, we will keep looking at the growth trajectory and take a call. But our comfort is more on large cap IT names at these valuations as compared to mid cap IT names.
Okay, that's interesting. And the moot point here being valuations, right? After the kind of underperformance that we've seen, the kind of concerns in the last 1 year, IT valuations are now perhaps looking a bit attractive. Got it. They are the biggest gainers. There's good buying that's seen. In fact, Infosys is now up 5% on top of the gains that it's seen in the last 1 month. Harsha, thanks for joining in. The next big trigger will come in from the banking names, right? You have HDFC Bank's numbers next week on the 16th. What is your view on the private sector banks? How are you positioned here?
Again, this segment seems to be one where there is relative valuation comfort, even within the large caps, I would say. And as far as our view is concerned, large caps are at a better valuation as compared to mid and small caps overall. And within large caps, the banking names probably give you a little more comfort. And overall growth trajectory should be more or less as per expectations. So no great deviations from expectations in that sense. So overall, it should be a decent segment to continue focusing on.
All right. Hi, Harsha. Morning, and good to see you. And as always, Nigel on this side. Harsha, I wanted to ask you, what's your positioning on the auto space? We have the numbers that just came out. Bajaj Auto, they are revving up the engine. They're sounding very, very optimistic about the future. I think you have exposure to Maruti as well as Hero MotoCorp. At current reckoning, what is your preference from the auto space?
Nigel, we continue to remain positive on the auto segment overall. Within auto segment, probably the more comfort is on two-wheelers and passenger vehicles rather than tractors, which is seeing some bit of demand deceleration at this point of time. Also, given the fact that monsoon was deficient this time, there will be focus on next year's monsoon until we get more confidence in the tractor sales. So to that extent, probably in the pecking order, two-wheelers and passenger cars would be above our tractor segment in terms of the growth going ahead. And as far as the margins are concerned, I think more or less most of the companies in the auto segment should deliver decent margins. So overall, as we have seen in the past 2 quarters, as well as what our expectations are for rest of 24 and financial year 25, we believe that auto segment will deliver earnings growth, which is going to be higher than that of overall market. So to that extent, this will continuously be one of the focus segments within our portfolio.
Okay. Harsha, what's the sense overall on the market? Because we've started this year with a bit of ranging action, a lot of moving parts. I mean, there's, the general election, the vote on account is coming up, and there's just a lot going on. And then we need more clarity on the pace of US rate cuts as well. I mean, if you put on your, magician's hat and try and look ahead in the future, what's the overall sense that you have? Is it going to be more of a range-bound year, or can we actually expect the bumper rally of 23 to continue?
Surabhi, clearly, what we have seen over the last year or last years, I don't think one should take that as a base case assumption for the next 1 year or next 3 years. One should definitely have moderated expectations from equity. They will definitely do better than many other asset classes, but I think probably with higher volatility than what we have seen in the past couple of years. As long as the earnings growth is continuing to be strong, I think there is going to be enough returns coming from equity markets. We are expecting about mid-teens kind of earnings growth for the Nifty basket and a higher amount of growth for mid and small caps at this point of time. So from a fundamental perspective, there seems to be very little in terms of negatives at this point of time, whether you look at economic backdrop or corporate fundamentals. However, valuations have moved up and continuously have been moving up. So to that extent, one needs to keep an eye on valuation, because if there is any external headwind or any pullback in the markets for whatever reason, then I think the valuations will come into play and can lead to more volatility than what we have seen in the past couple of quarters. So that's something that investors should be open to embrace.
Okay, just want to point out momentum is really picking up in the broader markets. Don't be fooled by the headline index, which is flat now, but just look at names. Polycab is now up almost 3%. Trent is gaining quite a bit of ground actually for the last many days. It's come back into action. Trent is up about 2% or so. Macrotech Developers is up 2.5%, and real estate has been very, very strong. And now the entire mid-cap IT space is also coming alive. So whether it's Cyient, Mastech, a couple of others looking pretty good. But just before we let you go, all right, in fact, I think we've run out of time. So Harsha, thanks a lot for joining in. We will take this discussion to another day. But since you're mentioning, the IT stocks, they're all up and about in trade. Just wanted to mention that.